All right, good morning, everybody. Give me a second here. All right, so market likes the inflation data. Always about, if things seem to be getting a little worse, the market likes that the Fed won't raise interest rates much more, but they swear they're going to do it, right? So we know, reporting like 70% now, but we're getting closer to the end. So bye. But yesterday, we got a retest of this prior high, and was it looks so obvious on the daily chart because we're not looking at the intraday data. It is obvious, and it gapped up, and it got sold. But on its way to getting sold, you can see the 15-minute chart here. Rattled around. It took a dive down through this support, rallied all the way back up, then made an additional M top, and then fell all the way back down again toward the low of the day. So now we go to our factory work, right? And what does our factory work say? We want to see prices stay in the lower half on a closing basis of that bar. The deeper it closes into that bar, the more this bar and pattern come into question as to whether they will follow through to the downside. We see what prices are right now. They're right smack in the middle of that bar. And as we look to the left, there's nothing there. So what does the factory work say? There's a void because of the way it came down. It's created some support. We'll see if it can keep going back up. We'll look at the futures to get a cleaner view because I don't know, maybe that was on the news. Probably it whipped back and forth there. So from an intraday point of view, to stay here, well, it could go higher and collapse right back down again. So we don't want to get in front of this if we're thinking sell. Once it has a pivot and a retest pattern, well, that could be possibly where it goes back down. I was just telling me that up-down pattern is a bull sandwich in a higher time frame. I suppose in some time frame, yes, you're right. Since this went down hard and it came up like that and back down again, yeah, it would be a bull sandwich. And I have this on 180. Must have compressed that I didn't want to have the wrong chart. Compress that at one day for some reason to look further to the left. So kind of like what you're saying there, down, up 2 bars. So we look at bar by bar. We look at concepts. And another part of our factory work, what I like to call the thought process and the lessons of the course, is retracements is another part of understanding price action. So regardless that this is 2 bars versus 1 bar, which would be a bull sandwich, makes no difference. It was a big bar here, 2 bars there, 1 bar down, right? Call it what you want. It's going down. Well, down to where? Well, theoretically down to the bottom of the trading range. And then if it doesn't bounce from there, it falls much further, right? Down into this area down here. Right now, we see prices are up a little bit. They're not up enough to negate what's happened yesterday. They would have to be gapping up near the top of this bar to even start to do that. So we don't have that. So even though there's a positive reaction to the news, it's not so positive that it's negating yesterday's pattern. What occurred here? This was a pivot. It gapped up to the pivot. The pivot happened in an area of price resistance. If you remember the pre-market on this day when it was opening, I said the S&Ps are coming up to the wall. And they could have gone up a little further, but they didn't. And very shallow retest. Our conversation was, hey, are they complacent here? Or is this, some kind of, bull market of the 90s where such a shallow retracement could result in a measured kind of move higher. And that's not the environment we're dealing with. So that now we've got this retest pattern, and does it result in some kind of sideways correction, which we're going to probably have to wait? Well, as far as the sideways goes, it would take into next week going sideways, or, do we get some follow through below these lows here? And we've talked about the weekly chart being up against the top of the trading range. So it would make sense, some kind of corrective price action, whether it's, lower or sideways, right? So, a shallow pullback here wouldn't negate this. The frustrating thing about trading ranges, depending on how you're using them, if you're doing credit spreads, they're wonderful. If you're a directional trader, they suck because it could be choppy like this, which is, so erratic. How do you do with this? Because, it stops you out, it goes back up again, the momentum stalls. It's craziness. And one of the crazy parts about it is, like, here, you've got this strength that's supportive. Hey, if this thing can do well, this could go higher, right? If it went sideways and higher, but no, it fell all the way back down to the bottom of the range. So now it's all the way back up to the top of the range. What is it going to do? Is it going to go sideways and higher? Or does it fall back to the middle or all the back down? That's the unknown, which, hey, that's what we're going to be dealing with. What is this Facebook user? Hi, Greg, visiting the Grand. Oh, McGraw is logging in from, sent some bot. Hey, McGraw, I'm glad you made it even there on from Facebook, visiting the kids, grandkids. That's terrific. I don't have any grandkids yet. Someday. Glad you joined us. So, that's what we're dealing with from a longer term perspective, the bias here. What's going on here. Of course, this is the beginnings of a bearish pattern. There's no confirmation of it yet. We see where things are today. So what does that mean? That means we're going to continue to deal with a level of uncertainty until we have some confirmation of the depth of this retracement. Bullish, can we get a red bar ignored in a couple of days? Or does it move to the downside? So we're going to deal with chop and uncertainty until we get some of that. Now, breadth, you can see, is beginning to deteriorate as it consolidates, which is normal, but nothing of significance yet. And sentiment is dead neutral. So we don't, if this was up here, we'd be much more confident that this could follow through lower. So even though this is moved up, where, say, this shallow pullback is a suggestive of complacency because it didn't pull back further. They're too bullish in a market that's not all that bullish. However, they're not buying an excessive amount of call options. So from one point of view, they're a bit complacent or too anxious to buy. And from a leverage point of view, options, they don't know what the hell's going on, which who does at this point? So that's truly where we're at as you try and figure this all out. Where are we going? It's a moving thing day to day, but what I've just explained to you gives us technical reasons as to why things are as they are with market internals. And we could look at intermarket relationships and such, interest rates and so on. But look, we're going to be dealing with this kind of uncertainty for a while yet. We just don't have enough things lined up to provide us a more definitive bias. And was telling me, it's interesting the way you're communicating here, McGraw, because what it's showing me is that something through Restream says it's a bot, Facebook user. I don't know. It's interesting. He's saying Gamma says 40, 65, 75 should hold. And he's asking me if technical analysis is supportive of that. So let's go and take a look at SPX. I first like to look at the futures, because you get that 24-hour view, and you got a different picture of that same bearish pattern of a rejection of that pivot with the topping tail and the positive reaction up. And so gamma, he's telling me on SPX, same void. Here's a wide range bar, but is this more powerful than the nasty move down? I'm not sure yet. You know, this is power, but as I say, it's the weakest link. This is power, but this is the weakest link down below. Top of the trading range, you know, bearish rejection here. You're going to get punched in the face probably either which way, unless you're pretty damn quick. But with the credit spreads, hey, if it just doesn't go there, I get to keep the money, right? So that's what we got here today. Forget this number. I had here was 41.40 or above, depending on the premium. So we're saying 65.75 should hold, 65.75. So this is where he's saying gamma, which is related to open interest, and that could be over different expirations. So what we do is look to the left and see, is there actually something lined up with what the option gamma guys would suggest? And so this low area right here, we can see is at around 40.70, which lines up with the gamma levels. It typically does, you know, so, you know, option traders just go through so much of this fancy stuff that looks so impressive, just like many other types of analyses, that by the time they get to the conclusion of where they believe their potentially proprietary information is, 99% of the time, if they just look to the left, they'd find the same thing, whether it's gamma, whether it's fibs, whether it's waves, and so on and so forth. So this level right here is where there is a relatively significant level of support, 3 pivot lows on the, you know, retest area. So if it breaks below here, it enters the void to move lower. So with credit spreads, we want to be below this area. And what I put these lines here, since the ranges have contracted, they're now, the daily ranges are about 35 points. So we'd like to be below, if possible, this area, below 40.50, if that's possible. Is it, what makes it possible? Is there premium? Last I looked, there wasn't. But if the market drops, there will be. Now, to get back above 41.40 or above. So since it's moved up, can we get above 41.40 or above? So that's where you want to look for that premium, you know, as the market opens, and we'll see where things are moving. So with these lines here, this is from basically yesterday's close, and this is where I marked off where prices were in the middle of the range on SPY. So getting above 40, I would call that your safe zone. And if you can get below 50, just based on today, that should be, you know, below, it's below here, decently below here, you're in a safe zone. Okay, let's continue. Qs or the NQs, futures on the 20 MA on what we call minor support, right? Stabilizing there. We look at QQQ. You know, up a little bit, starting to back off. Where is it? In the bottom of this range, could be, I think Dan mentioned, could be like a 1, 2, 3 continuation. What's wrong with this as a 1, 2, 3 continuation? It's in an uptrend and support is right here. So when we look at something as a 1, 2, 3, we then have to put it in the location where it's at and the trend and what's to the left. And while that it still could go down because we've got this bigger starting of this bigger picture, right? Weekly charts and so on, it could pull back, but we would not expect this to collapse yet. Whereas this is an uptrend and kind of jiggling lower where, you know, SPX is going sideways, a little bit more bullish, but when more bullish fails, and it's got, you know, more bullish because it went up so strong, it's got more room to fall. There's a lot of different things to understand, nuances to the larger analysis of looking to the left. right? Looking to the left sounds so simple, and it is. But when you start from a point of simplicity and then dig deeper into the details, you really understand the power of what we do. All right, so I can get Dan on here. It's getting late. Bearish pattern on the transports. We got confirmation. We could go down the bottom of the range. Resistance is up here. IWM, been the weaker, same pattern. Looking at the futures, right? They come out of the blocks yesterday and hit the wall, back down again. So far, just a lot of chop. Got the Dow, rejection. So far, if you visualize this on a closing basis, it's just going sideways. Does it become a topping tail ignored to go higher? I don't know yet. Same big move down and wide range bar. Interest rates getting interesting. Is this going to break below these lows, like this being a 1, 2, 3 on the weekly chart? Does that break lower next week? And that has positive implications and some very negative implications. We'll talk about it next week. 13-week. See, it's up here, backed off a little bit, but look, they're saying the Fed's going to raise. This says the Fed's going to raise. We want to keep an eye on this. Does this actually at some point next week make a new high? Then we're going to know 100% sure that they're going to do it. Right now, supposedly the numbers are like 70%. Dollar moving down. Maybe it's going to come down here. And, it's in a precarious spot, but it's dropping, which should be helping gold. Of course, it is. It's continuing higher. And silver continues in that bull market advance. And Bitcoin, everybody's watching. Interesting. It's interesting that, was it Warren Buffett on there yesterday still talking about, and some other people, that this thing's going to go to zero, and who knows, but it ain't going to zero in the short term. That's for damn sure. And there's the inflation. So we talked about yesterday that these numbers are skewed versus they were looking at last month's data. And this is saying, well, here's inflation. All yours, Dan. That was a long one today. Sorry.
Oh, it's perfect. Good morning. All our opens are fine. We were doing trimming yesterday in the pullback. Not a whole lot of earnings, but let's see what we have here in my interest rate list and cappers. Earnings. Sportsman's. That looks horrible. Look at daily, weekly, monthly. That's looks horrible, but it's gapping too much for me. Rents. No great pattern, gapping down fast. 50, 60. So to the bottom of the range. I have no idea what's going to happen. Let's put it over here. Is it going to? That's actually a pattern gapping to the low of the range. Just as a general statement, I'd say you could trade 30-minute high or low for a day trade. And it's either going to hold here and try to bounce, or it's not going to hold and go down to the next level. Delta earnings, nice gap up here, was bigger, but gapping to these highs. It's still a bullish gap over that red bar. AAL really brought down the sector yesterday with a profit warning. And, up a little bit, but this is just total sympathy. Nothing happened any different with AAL overnight. That's for darn sure. And so that's it. Those were all the earnings. This is just a watch list. Adobe failed buy setup, has a price void under yesterday's low. Ideally, and we were saying this yesterday, we put on a couple call spreads, Costco being one, NVIDIA, car. When you have such a big bar, it's ideal to get a 15-minute sell setup that doesn't retrace more than a third into the bar, or let it bobble around and do a 1, 2, 3 breakdown for tomorrow. Dash got ugly trading range. I mean, a lot of bullish breakouts. I just got slammed yesterday. Piton would have been a great morning short had we seen it earlier. A little M top there with a void. Greg mentioned this yesterday, and B Frog. So I looked it up on Yahoo Finance, and it's what I've been predicting, that who knows how much AI really goes on under the hood at these companies, but they've figured out that the new buzzword is to say that their products and services are intertwined with it. So this was one of them. And then this IDAI, the name of the company is like T-Stamps. What on earth does T-Stamp have to do with AI? But go to Yahoo Finance and it's intertwined in there. And, you know, I don't know if this was all an AI bounce yesterday based on somebody's marketing ploy, or if something real fundamentally happened there. But I'm gonna add this to my AI list, and added B Frog yesterday. IDAI, and even if it's not totally fundamentally correlated, like an AI stock, as long as it trades like it, that's all I care about. Yeah, I have SRPT right here, Alex, coming up. 122. When you say long watch, I would prefer a long watch just because the gap is so large. Ideally, though, I would like this to sell off more, and maybe even, you know, go 119. Let it exceed it, and then it would be then we'd look for a 15-minute climactic. It's a biotech, so you know, got to keep that in mind. And you know, I prefer these gap downs and already to be a climo pre-market, but then this is actually breaking down right now. CTLT, I think might have had earnings of some sort, and gapping down. That's an ugly gap. It's gapping under this thing. We'll come back to it. Console up huge, but it's too big for me. Daku's on our list for a bear, 1, 2, 3. Notice it's only up 32 cents. So from a relative perspective, with the market gapping up, 32 cents is not that much. As you can see here on the 15-minute chart, with this shellacking yesterday, that's not that much at all. So that's still weak. CXAI, you know, whenever I see these little stocks going, we got to look at software. Yeah, I'm just looking real quick. I got my Yahoo page up. Workforce platform. All right, I don't see AI jumping out in that description. Baba, you know, this I was wondering the weakness the last 2 days, because this was actually a bullish 1, 2, 3, and then the news came out that Ma, I guess is his name. He's been dumping his shares, but now it's gapping up. That's not a bad day trade setup at all. Steady fluid downtrend, gapping up over this afternoon base and going sideways. So that, for day traders, keep an eye on that. Rexer. Yeah, SoftBank, yeah. All right, Rexer here. Why am I looking at you? I don't know if it was earnings or what. Oh no, or maybe that was, yeah, that was from Sam's list. Yeah, Sam's list gave that to me. The ideal entry was yesterday under Tuesday's low though, so we're late on that one. AEP, nothing to do on the daily yet, but I like the weekly here. So ideally, it'll just bobble around a couple more days. Since if you like trading penny stocks, this is the entry. You had an igniting breakout, a big old rounded bottom, 20 MA curled up, closing breakout, target maybe 50 cents. We talked about that one. I don't see any liquid prints here, but Z over yesterday's high, daily, weekly, monthly are bullish. I have an alarm at 45.80. Octa, another, just so many wide range bars yesterday. Dell is on the relative strength list. Just not a huge target, but this gap reversal was on negative news about how much the PC industry is down. And I think they said Dell and Lenovo were down like 30%. That's crazy. Look at this PGR in the middle chart that I just put here. This Progressive Insurance. I mean, for a big old insurance company, that's a nasty, nasty gap. Look at the daily, weekly, monthly. We're in power uptrends. If anybody knows the news on this, I'd be curious. Because insurance companies have been weak along with regional banks. So I would be very curious to know whether PGR announced anything negative relative to bond losses like the banks have been doing. Tomorrow starts banking earnings. I have to check. All right, this would be a beautiful 1, 2, 3 if we get an inside bar and it's gapping up here. So I'm going to set an alarm at 48.90. All right, my chug alarm went off. There's 30-minute high bottoming pattern. Surely not doing anything with it right now. All right, Z gapped over the high. So let's watch Z to see if we can buy it into a gap fill. I posted it as a watch yesterday, but not official. I said, wow. So that was that a pre-release, Scott? Because I didn't see it in my. Oh, Tim's asking about Tesla. Greg, your beeper didn't go off on the other computer. The problem with Tesla short, it needs more of a correction on support, Tim, without bouncing, because we like closing breakdowns, and that has too much horizontal support. So I just need more information is all. In the FANG department, Meta.
Again, I would add to that, you can do it, shorting it under that bar's low. I would do a half lot. So not only big stop, half the position. So you're not, so whatever your risk is, and so you're not going to get hurt bad. But you got to realize it's not going to collapse. So you have some time to sit there psychologically comfortable until it gets to pick up some steam, because the pattern supports that bias.
All right, so this Z Zulu, let's watch it on a pullback. That alarm went off. Look at fast bottom right. So see, buyers did step up here. If this were Friday, tomorrow, this would be a fantastic 1 DTE. Let me check right now anyway. And I don't trade in the first 5 minutes. So when I say fantastic, I wouldn't do it before 9:35. All right, Q's 5-minute chart actually the best right now, taking up the pre-market pivot.